What's up guys, my name's Curtis and welcome to 5 Minute Finance, where I take personal finance topics and explain them to you in 5 minutes or less. There are a plethora of different ways that one can make money in the real estate market. Flipping, buying turnkey rental properties, house hacking, live-in flips. The possibilities are almost endless if you're creative enough. But one very popular method of real estate investing is called the BRRRR method, or buy, rehab, rent, refinance, and finally repeat. The thought process with the BRRRR method is as follows. You buy a home that needs some rehab work, but because of that, you're able to get it at a very reasonable price. You then rehab the property almost as if you were flipping it, so you can add a bunch of value to that property. Next, you rent out the unit for probably much higher rent than you could have got pre-rehab. And finally, you refinance the property, taking out as much of your initial investment as possible so that you can go repeat the process on more and more homes. I do want to run through a quick example to show you guys just how powerful the BRRRR method really can be. All of the numbers we're about to go through are completely hypothetical, but with that being said, there are plenty of examples all over the interweb as to just how powerful BRRRR can be. Let's assume we have the following. You find a home that's listed on the market for $75,000. You estimate that it'll need approximately $30,000 worth of rehab work, but after you're done rehabbing the property, it should appraise for around $150,000. You could pay for this deal in many ways, and if you had the cash, you could go right ahead and do that, but one of the most popular methods for BRRRR is called hard money lending. So we'll assume you borrowed $105,000 from a hard money lender. And yes, interest rates on hard money loans are going to be pretty high, usually 8 to 12% depending on your situation, maybe even higher, but that's totally okay. We'll assume the rehab takes 6 months, which is pretty long, and during the entire 6 months, you're just paying interest on that loan. So the total amount you're going to pay in interest to that lender over the course of 6 months is about $5,000 or so. So your total cost to finance this deal is around $110,000. After the rehab, you rent out the property for, let's say, $1,500. And this may be high, this may be low depending on the area, but it's definitely an achievable number on a home like this that we're just kind of drawing up. As soon as you get it rented, you're also going to do a cash out refinance, where you can take out generally 70 to 75% of the value of the home. We assumed the house was worth $150,000 in this example, so from a conventional mortgage lender, you could probably get a loan for around $112,500. And this is going to be where your interest rate drops substantially because it's now a traditional mortgage. If we assume closing costs on that refinance are going to be somewhere around $2,000 to $6,000, that means when it's all said and done, you have a $150,000 home with little to no money out of pocket. And you now have an asset that's gaining you money every single month in cash flow, and your rent is also paying down the mortgage, you're getting tax benefits, just like a normal rental property. I know that example was cherry-picked and put together by me to make the numbers look exactly perfect, but believe me, you can find plenty of examples out there of people who are doing exactly this and getting homes for little to no money down. When it comes to BRRRR, I see 3 distinct advantages over a lot of other forms of real estate investing. Number 1, since a good chunk of the house is brand new, you just rehabbed it, compared to traditional turnkey rental properties, your maintenance costs are going to be significantly lower, meaning your monthly cash flow is going to be quite higher. Reason number 2, when compared to flipping, you're going to pay a lot less tax in the year in which you do the rehab, because you aren't selling the home and realizing all those gains. Plus, now you have, like we mentioned, an asset that's bringing you money every single month. And reason number 3, with the BRRRR method, it's completely possible to get an infinite return on your money. If your total out of pocket is 0 after the refinance, or maybe even less than 0 if you added enough equity where you could take out more than you put in, your cash on cash return is quite literally infinite. As with any form of investment that requires you to borrow money, you definitely need to be careful with the BRRRR method and do your research ahead of time before you jump right into it. But if you do it right, it's a great way to get into the rental market with very little out of pocket, and it's a way you can immensely grow your wealth long term. If you guys enjoyed this video, I would really appreciate it if you gave it a thumbs up. If you're new around here and want to see more personal finance videos in the future, click on this globe right here to subscribe. And as always, thanks for watching.